Jet Airways was once India's top airline. It all started when 26-year-old Naresh Goyal decided to start up. He borrowed some money from his mother and formed his own travel agency Jet Air in 1974. By then, he had learnt the tricks of the airline trade. Here's how. In 1967, Goyal began his career as a cashier in his uncle's travel agency, East West Agencies, at a starting salary of Rs 300 a month. He soon joined the travel business with the GSA for Lebanese International Airlines. In 1991, as the economy threw open its doors, Naresh Goyal also took advantage of the times. He owned the travel agency Jet Air and decided to launch Jet Airways. It started as an air taxi, as Indian laws didn't permit private airlines to function as scheduled carriers. 2 years later, the airline started flying commercially. In 1993, the company began operating with 2 Boeing 737-300 planes. Indian Airlines ruled the Indian skies in those days. But in 2002, Jet crossed Indian Airlines in market share. However, controversies were not far behind. At this time, questions were raised about his links with the underworld. Intelligence information doing the rounds was that Goyal had links with Dawood Ibrahim. But Jet kept flying from strength to strength. Jet Airways was listed on the Bombay Stock Exchange and became a public company on December 28, 2004. The company's IPO in February 2005, which offered 20% of the airline's stock, saw strong interest from investors. The airline raised Rs 18.9 billion, sending Naresh Goyal's fortune soaring. In January 2005, the Ministry of Civil Aviation granted rights to Jet Airways to operate services to London's Heathrow. International operations began and there was no looking back. Between 2006 and 2009, Jet had a dream run. Growth and expansion kept the airline and the man at the helm busy. It acquired Air Sahara, renaming it Jetlight. In 2008, it entered into an alliance with competitor Kingfisher for code sharing, collaboration on frequent flyer program. In May 2009 came yet another milestone. Jet launched Jet Connect to fly on short-haul routes. In the third quarter of 2010, Jet Airways became the largest airline in India with a passenger market share of 22.6%. In June 2011, it became the first domestic airline in India to ban meat products and liquids in check-in baggage. And then something happened which gave another boost to Jet. Another domestic airline and rival, Kingfisher, wound up. Jet merged Jetlight and Jet Connect. In September 2012, government announced that foreign airlines could take a stake of up to 49% in Indian carriers. On April 24, 2013, Jet announced that it was ready to sell a 24% stake in the airline to Etihad for $379 million. The deal was completed on November 12, 2013, with Naresh Goyal retaining 51% ownership of the stock. But Jet's problems had begun some time back. They started when it embarked on an aggressive international expansion plan. Low-cost carrier Indigo had also begun eating into Jet's market share with cheap fares. The airline took some steps that may have backfired. To compete with low-cost carriers, Jet lowered prices without reducing its expensive services. The carrier ordered 22 wide-body aircraft for delivery over about 18 months starting in 2006. The 26-year-old airline has posted losses in 8 of the last 10 years. Its share of the domestic passenger market has fallen to about 15.5% in 2018 from 22.5% in 2015. About 60% or more than $600 million has been wiped off Jet's market value over the past year. State-run banks led by SBI took a temporary stake in Jet. They promised a new loan of 15 billion rupees and forced 69-year-old Goyal to resign as chairman. Jet's lenders laid out terms for potential bidders to buy up to 75% stake in the carrier. The downfall of one of India's most successful international brands shows the challenges of India's aviation sector. It's a cutthroat market dominated by low-cost carriers such as Indigo and SpiceJet Limited. Indian market is also price sensitive. Airlines compete to keep airfares low. The domestic market has seen around 20% rise in the number of passengers over the years. High fuel prices and hefty taxes added to Jet's problems. Jet's story has several lessons for airlines and the airline industry as a whole. I just hope some lessons have been learnt.